afternoon. Happy Friday. My name is Caitlin, Customer Success Manager here at SONAR, and welcome back to WithSONAR. This webinar is designed to help explore tools and use cases to enhance your overall SONAR experience. Last week, we went over our insight pages to help keep you up to date on market conditions as well as get ahead of any shifts that may occur. And this week, I'm going to go over our single lane pricing tool, which is Rate Intelligence. So let me share my screen with you and we'll jump right in. All righty. So going into a holiday week, this is the perfect tool to help get ahead of any holiday rate shifts with our real-time market rates. You can get to Rate Intelligence under Applications, and it should be at the very top. For overall usage, it's pretty standard where you're going to select your equipment type and then type in your origin and destination. And then you can search or save the lane. So if you have a lane that you're running pretty frequently and you want to save that lane to reference it time and time again, you can click here and keep it under your saved lanes. That way you don't have to type it in every time. Now, when it comes to rates, our rates are going to be a little bit different as they come directly from brokers that are paid to the carriers, and they're updated on a daily basis as of yesterday. So you're seeing real-time rates from yesterday reflective of current market conditions instead of some that may be a little more outdated or haven't caught up to overall market shifts yet. So you can see here the current average, the high and the low to see how far that rate is fluctuating. We'll also tell you how the rate has moved in the last 7 days and the last 28 days, so you can see if there's been any significant shifts for rates on this lane. Now at the bottom, we're going to give you the metadata behind this rate. So how far are we expanding from the origin and destination? How many shipments are we measuring? And how many days are we going back in time to pull this rate? Now, all of this information is going into our confidence score, which is a score from 1 to 5 on how confident and really how much data density we have around the rate. So a score closer to 1 is going to be a lower confident rate. We're having to expand a little further out from the origin, destination, and further back in time. Whereas a score closer to 5, we feel more confident in the rate we're putting out. We have a lot of density on that lane from a lot of different providers. Now, all of our rates, we have a 5-25 rule for our spot rates, where we require at least 5 contributors and they can't control more than 25% of the volume. That way you're getting a good representation of the overall market rate and you're not just getting one broker that's monopolizing all the rates that you're seeing. So we're ensuring to give a good overview of the market. Lastly, if you are a TRAC contributor, we will show your myTRAC rate here. So this is based off your contributed data. If you have ran the lane at least 3 times, we will then compute your myTRAC rate so that you can see how you're buying versus current market rates to see if you're maybe overpaying, underpaying, and where you need to make adjustments based off current conditions. Now, in addition to spot rates, we also have contract rates available. So these are going to be an add-on. If you do not see them within your screen, you can reach out to your account manager and we can talk through what adding these will look like. But this allows you to easily see how spot rates compare to contract rates if you are maybe thinking about contract again business, or you just want to see what the spread between the two is and maybe blend your rate to get the perfect cost that fits within your network. Now, our contract rates are different where they're coming from shippers financially settled invoices. So these are going to be shipper to service provider rates. And they're going to be updated on a weekly basis just due to the contract market not moving as frequently. We're not going to update those on a daily basis like we do with our spot rates. We do include fuel within our contract rates and our spot rates. So we wanted to make sure you have an apples to apples comparison. We wouldn't want to give you spot rates with fuel and then take it out of contract rates because that's not really going to help you when you're looking at the two side by side. I do always like to point out, since our contract rates are shipper to service provider rates, they are naturally a little bit higher because they're going to include that margin markup, that operating cost that you have to price back to the shipper, because this is what the shipper's paying you. You need to cover all your cost within that rate. So good to see if you're dealing more on the spot market and you have the contract rate, this gives you a good idea for what you want to keep your markup under when you're pricing back to your shipper from a broker or carrier perspective. Below those contract rates, we have our target margin calculator. So you can easily, when you're pricing out shipments or viewing market rates, you can adjust your margin requirements here by a flat dollar amount or percentage. And then we will do the math for you directly in the tool, so you don't have to go to another page or pull out your calculator to get pricing back. So now, what really makes our tool special is the market insights that we now provide in addition to your rate, because ultimately a rate is just a rate. It's more important to understand what is driving that rate and how you need to make adjustments based off current market conditions. So we have our broker guidance here, and this is going to be based off our difficulty score, which is a score from 1 to 9 on how difficult it is to secure capacity on this lane from a spot perspective. So this is real time, updated on a daily basis, which is why we're calling it broker guidance. So for this lane specifically, it's a pretty stable market. It's not giving you too much trouble. You're sticking to your recent service and rate expectations. So kind of just keep doing what you have been doing. Don't expect any immediate shifts that you didn't see coming. So from a broker perspective, standard market conditions, not going to give you too many issues. And then if you're looking at it and you're a shipper, if you have a last minute fall off, it's probably not going to be too difficult or too expensive to get this shipment recovered. So this is just great to see. All right, I'm looking at the current spot rate. This is what I can expect from a capacity perspective. Okay, I'm set up for success to cover this lane on a spot basis. Then we have our lane score, and this is going to be more of that long-term capacity expectation. So this is a score from 0 to 100, and it's going to be from most difficult to easiest to secure capacity from a market perspective, but it's more of a 3-month look back, so you get a longer-term capacity expectation. So if you are looking at pricing for a project that's going to be a month or so longer, or if you're wanting to see contracting this lane out, what you can expect from capacity when you're running it more frequently, this is a great indicator for that. And then if you are a shipper for perspective, and maybe you've had some difficulties with your incumbent carriers, you can see with this easy score, okay, if I'm trying to recover capacity on this lane, how difficult is that going to be? Those scores that are 0 to 25 are going to be more difficult. You really want to nurture your network to ensure that they're taken care of, that they are happy with the business. Whereas if this was a higher lane score from 70 to 100, that's going to be easy to cover from a market perspective. Every carrier is going to want to haul that business, especially if they're based out of there. And that would give you a more favorable terms if you wanted to look at maybe resourcing that business. And next to that, we have our capacity conditions. So this is going to give you current rejections and then how they're changing. So currently Dallas is at a 4.61% with minimal change. So overall, nothing too crazy going on with the Dallas market that you need to be aware of or prepare for. So this is going to be a great leading indicator for any capacity restrictions to know if you need to prepare to pre-book or prepare for fall-offs, or your rates are going to be heavily elevated because this market is extremely tightening. The chart below that is going to show you rejections for the outbound market in white, overlaid with contract rates if you have them in purple, and then the spot rates in green. So this chart just allows you to dive deeper into those market changes and how they're affecting your overall rate. Now, I will say, when you're looking at these 3 data sets on the chart, especially within Rate Intelligent, it can get a little cluttered. So if you hover over the data set, you can click this little X and close out of one of those so you can look at 1 or 2 data sets at a time and not have the chart be so overwhelmed. So for these 2 specifically, it's going to show you the spread between the spot and contract rate. So this is great to see, okay, are my spot rates closer to contract rates? Are they exceeding them? Are they way below contract rates? To know what you're competing with the market and other service providers. Also, spot rates are going to be more volatile. So if you are trying to talk to your customers or your shippers and explain why your rates are all over the place and you can't really lock in a consistent rate to, run the shipment for long term, showing them, this volatility in the spot rates and how much more stable a contract environment is will help kind of back those decisions when you're making those negotiations. Now, let's say you're just purely dealing with this on a spot market perspective and you want to drill into that. You can close out of contract, go back into this compare. And if you need the ticker code, it's going to be up here under rejections. I'm going to change the color and I'm going to type in van rejections for Dallas. So then I'll have rejections overlaid again in white and those spot rates in green. So you can see here, as those rejections spiked up, looks like mid-June, we saw the rates follow suit. And same when they drop back down, they've been on a steady downturn, but we are starting to see some shift back up. So again, helping understand that why behind your rate shifts, as well as getting ahead of those when you have that leading indicator. And again, having this chart to show those conditions helps back what you're feeling in the market. So when you run into those service troubles or when you need those rate increases, you have something besides your gut telling you what's happening on this lane. Now, lastly, we have our TRAC Market Conditions map over here to the right. So this is going to tell you where spot rates are increasing or decreasing the most by trailer type. So you can see easily where rates are either having significant increases or decreases. The blue markets are going to be those that have more outbound shipments increasing rates. The red is going to be where those rates are decreasing. And the darker the color, the more significant the shift. So for this lane specifically, it's pretty neutral. You can see there's not too much color on my map. However, let's say you're picking up out of a market that is heavily blue. That is telling me that spot rates have been increasing in the last 4 days significantly out of that market, and my cost to the truck is going to be elevated if I'm securing that on the truck on the spot market. Now, if I'm picking up out of a blue origin and delivering into a red destination, now my carrier is not going to get paid as much money for that red market that he's delivering into. So he's going to up that cost on the front end because he's going to worry about what he's getting paid on his backhaul. So good to just give you some more information when you're pricing those shipments and understand what's going to drive the rate that you're hearing on the phone. Overall, this tool is going to help set you up for success to make informed pricing decisions all in one place, especially as we head into a volatile holiday week. This is currently available within your SONAR subscription under your applications. Again, if you have any questions, you can reach out to us at cs@gosonar.com or your account manager. We would love to talk through this with you further. And yeah, I hope you enjoyed this episode of WithSONAR, and we'll come back next time to hang out with me. As always, if you have any requests for specific products or use cases you would like to see on future episodes, please leave them in the comments below. And I hope you have a great Thanksgiving, and I'll talk to y'all soon.